Welcome to the Aging Boomers. I'm your host, Frank Sampson, and on this show we discuss so many of the issues facing boomers, their parents, and what we know as an aging population today. So I want to welcome all of you and thank you again for all your support. So many of you have gone on to iTunes, or we're now on iHeartRadio as well, and subscribed and given us comments, and so we really appreciate that. You could also go to agingboomers.com, or you could download. The easiest is if you have an iPhone or Android phone, go ahead and download the app. It's free, and you'll get updated on all the shows as well. So thank you so much for your support. And before I introduce our wonderful guest today, I'd like to let you know that today's show is sponsored by Senior Care Authority, a senior advocate and living source. Senior Care Authority is a professional senior placement and elder care management organization that has a national network of professionals to help in determining the right path for seniors and receiving proper care or supervision. Whether it's in-home care, assisted living, residential, or memory care, you can talk and meet with a representative in your area, a senior care advisor. You could just call 888-809-1231 or go to seniorcareauthority.com. And some great people there. I want to introduce our guest today. Marilyn Brown Ross has been a reverse mortgage specialist since 2006, where she started her career at Wells Fargo. Marilyn has assisted countless seniors in understanding the basic concept of the reverse mortgage program. She has a strong personal and professional belief in people and a passion for the reverse mortgage product. So, Marilyn, thank you so much for joining us on the Aging Boomers. Really appreciate it.
Thank you, Frank, for having me.
Oh, it's great. So it seems like, reverse mortgage went through a time where it was popular, and then maybe the market got hurt with real estate, and there were some question marks there, but seems that it's back strong as ever. And maybe we could start out you just telling us a little more about what a reverse mortgage is and the various types.
Okay, Frank. Well, a reverse mortgage is a tool, a product that allows you to access the equity in your home without having to make payments, as with a traditional mortgage. Back when they first started, back in the early 80s, they really were not a good thing, and that's why I believe the reverse mortgage has kind of a bad rap today, because back then, the lender would tell you, we have to go on title with you. So basically, what I still hear to this day is I don't want to really do this because the bank or the lender is going to own my home, which was basically true back then. But that didn't last long, and the government stepped in and said, no, this isn't going to happen. So today, no one goes on title with you. It's a mortgage that you remain in your home. You hold title to the home. It stays in your trust if you have a trust. There's a couple of things that have to be met. You have to be 62. You have to live in your home as your primary residence. And as it stands today, there are no credit or income requirements. That is looking to change soon. The government is looking to implement what they call financial assessment, which means it's going to be more like a traditional loan where you have to qualify credit-wise and income-wise, which is not the case today. It's a very simple loan to do. But this is a loan that you have no tax consequences, unlike if you're drawing from your retirement, you have to pay the taxes. This is using the equity in your home, so there are no tax consequences. And it really has helped many people remain in their home. I've taken them out of foreclosure, so they've gotten to be able to remain in the home that they love and want to stay in. As seniors, which I am one, we really don't want to move when we've been in a place for a long time.
Right.
So, and one of my favorite aspects of a reverse mortgage is, unlike a conventional mortgage where you have a payment to make, God forbid something happens, you get behind, you're in foreclosure. With this, no one can take this home away from you because there is no payment to make. There's no way you can get behind. However, if you want to make payments, that's another option that you can. There's only 3 things you have to do. Pay your property tax, which you probably already do. You have to keep your homeowner's insurance up, and you have to keep the property in decent repair.
So, it's interesting. You had mentioned about right now there's no pre-qualification. As long as you have equity in your home, it's pretty easy. But you said that that's changing. Is that because if the market went down and the equity got reduced? I mean, why does the person really have to pre-qualify credit-wise and everything?
Well, that was supposed to go into effect in January. It was postponed. It was supposed to go into effect again in July, and it was postponed. We're hoping that they really just kind of forget about it. But
okay.
I'm thinking it's because those 3 things you have to do, pay your property tax and the homeowner's insurance, if they weren't paid, that's when they could foreclose on you. So a lot of the seniors were taking out all the money to pay off their mortgages, not considering I have to have money to pay for the property tax. So I think that's why they're going to start looking into the credit and the income to see that the senior is actually able to pay those taxes and keep that going, because really the lenders don't want to foreclose.
Right. So here's a question I have for you, and especially dealing in the senior market, which I do. Someone with good intention takes out a reverse mortgage to help pay for care in the home. All right, which is probably one of the reasons people do it, because that could get pretty expensive. Yeah. So they do a reverse mortgage. They have a caregiver living with the person, or they have someone coming in on a regular basis, and then the individual's care situation changes where they can't be at home anymore. All right. So what happens?
If they can't be at home, I mean, if it's a known fact that they're never coming home, then that loan it's due and payable, because that has to be their primary residence. But I deal with a lot of people that go into a care home, and as long as they're not gone more than a year, then we're good. So they can be gone a year, come home for a little bit, and if they have to go back, that's fine. They've got another year. But once it is not their primary residence permanently, that's when that loan is due.
Got it. All right. That makes sense. So, we spoke before doing this interview, and you mentioned to me that you've helped senior homeowners turn their equity in their home into tax-free income without having to sell. So explain that a little more. That's very interesting.
Well, I kind of look at this like a big dome, your house. There's no way to penetrate that dome as seniors to tap your equity to use. So you're sitting here, most of us seniors are house rich and cash poor. And we can't get into that because there isn't a lender that's going to lend us without the income and credit qualifications. And as seniors on a fixed income, it's very hard to do. So this program, there is a lending limit. The national lending limit is $625,500, or the appraised value of the home, whichever is less. With this program, you're eligible to tap some of that equity in your home up to whatever your appraised value is. And no tax consequences because it isn't income. If it were income, you would pay tax on it. If it were, there's a line of credit you can use that even has a growth rate to it if you just want to leave it in the line of credit. Again, it's not interest because interest would be taxable. But as we age, the older you are, the more money is available. So you have this line of credit that gets bigger and bigger every year as you're using it or not. Even if you take some out, that the remainder grows.
Are you seeing that as somewhat of a trend, especially with the market fortunately increasing and people having more equity in their home?
Absolutely. I can't tell you how many I've redone reverse mortgages for when their value was down. They had much less money that was available to them. Now that the values of the property have increased so much, then they redo this, and you can redo them and pull out more equity.
Got it. So let's talk about using a reverse mortgage to actually purchase a home. Explain how that works.
Okay, so here we are as seniors. Sometimes we want to downsize. We're in a two-story, as is my case. My husband cannot handle the stairs anymore. He's ill, and we have to have a single-level apartment, or condo or home, whatever we choose. So you sell your property. Let's say you come out with a $500,000 equity, whatever your equity is. You're going to downsize. You find the property, let's say for $500,000. Well, you certainly don't want to take every penny that you have and invest in that property, even though you have no payment, but then you have nothing to live on. So the reverse mortgage will step in, depending on the value of the property and your age. I'm just using these as examples.
Right,
the reverse
exactly.
mortgage may give you $350,000 on a purchase towards a $500,000 property, which would mean you'd only have to put in $150,000 of yours, which gives you your $500,000 home with no payment, plus you've still got $200,000. I'm sorry, you'd still have $300,000 cash to access at any time for your living expenses. It's really catching on. It's a wonderful program that is really catching on.
So bottom line, what's the difference of doing it that way versus taking a home equity line and using that money to maybe purchase another home?
A home equity line, okay, the biggest difference is when you use your home equity line, you have a payment to make. And when we're on a fixed income, that is what we're trying to avoid. As seniors, at least in my case, I want to have my property with no payment plus have some money set aside. I don't want to use the money and then be forced to make a payment. That's the biggest difference.
Got it. So I mean that's very interesting. And so paying off an existing mortgage would work similarly, or
yes.
Okay.
The reverse mortgage. Let's say you have a $625,000 property. You owe $200,000 on it, and your benefit, depending on your age, let's say is $350,000, and you have a $200,000 mortgage. The reverse will pay off your mortgage because that has to be paid. Any lien on the property has to be paid with the reverse mortgage. Mm-hmm. Doesn't matter about credit cards or any of that, but that mortgage has to be paid, or a second. So that would leave you like $150,000 to do with as you please, to take as you please. You could draw it out all at once. You could leave it in the line of credit that I spoke about earlier with a growth rate attached to it. So every year it got bigger and bigger. You could say, I need so much money a month. I'm $500, $600, $1,000 short to pay my bills every month. And you could take it that way. There's just a variety of examples I can give you, but those are the three of the main ones that people do.
Got it. Okay. That sounds, I mean, you know, all these things we're talking about are certainly can be great advantages, or are great advantages of a reverse mortgage. I know with everything, there's advantages and disadvantages. Talk to us about maybe some of the disadvantages or some of the things that someone should be careful about doing and getting involved with a reverse mortgage.
Okay. That's one of my questions I get all the time when I'm with a client. Okay, tell me the pros and cons. There's many pros, and my answer to people is that it is an expensive loan to do compared to a traditional loan. So you've got your mortgage insurance premium because it is backed by the government, and that goes to the government. You have an origination fee for the lender, and you have your other closing costs. So I was dealing with one lady, and this was when I first started, and it kind of made me do a double take. And I said, well, it's an expensive loan to do. And she looked at me and she said, my dear, I'd like to tell you, I've been in this house for 50 years. I'm 78 years old. I do not, if I sell my home, I have to pay the realtor fees. I have to find a place to live. I have to move. So this to me is certainly not an expensive thing to do. So it kind of opened my eyes, and I've had a different outlook on that ever since. But truly, there is no downside other than it is more expensive than a traditional loan, which most of us can't get as seniors. So I don't know any other, to tell you the truth. I mean, I'd certainly tell you if I thought there was something, that was a downside to this loan.
So tell me about, as far, obviously we're going to give you the opportunity to tell people out there, our listeners, how to get a hold of you, because I know that you could service people anywhere in the country. But
right.
If they wanted someone wanted to deal with someone in their local market or whatever the case may be, what are the qualifications for someone to sell reverse mortgages? Is there a special license for it? How does someone check into an individual to make sure that they're credible?
There's a site called NMLS, National Mortgage Licensing System. And you have to be a licensed broker. You have to be a licensed loan originator, and you have to keep up with their testing every year. And as a matter of fact, I just passed the test so I can service all of the country. But I fly down to Southern California. I've flown to Arizona. Actually, anywhere that a client needs me, because I like to meet face-to-face with my clients. I'm not happy in doing it over the mail, just mailing things back and forth. But of course, if they're far away, if they're Midwest or something, I can still refer them to a reputable person anywhere in the country.
So someone that does regular mortgages, not reverse, just mortgages we're all familiar with, can they also do reverse mortgages, or is this a totally separate specialty?
It's a totally separate specialty. I'm licensed to do the traditional mortgage myself, but I just love working with the seniors, and I chose when Wells Fargo exited the business, they wanted me to stay and do traditional mortgages, and I said, no, I'm going to find a good company that I like and that treats my clients the way I want them to be treated, and I'm going to stay with this because I really enjoy working with seniors. So I can do the traditional, but I choose not to. I am totally a reverse mortgage specialist.
And so how would someone get a hold of you, Marilyn, if either website, email, phone, whatever you wish, if they do have some questions for you, how would they go about doing that?
The best way is just give me a call. My cell number, which I have with me all the time, I answer it in the evening, weekends, is 408-722-0010. I have a website that you can check out, and my website is www.MarilynBrownRoss.openmortgage.com. And then my personal email is MarilynRoss@openmtg, like mortgage, only shortened, .com. So any of those three ways would be I'll
Right.
get back to you, or I'll answer the phone if you should call.
Great. So that number again is area 408-722-0010, correct?
It is indeed. And if it's long distance for someone, I'm working on right now getting my 800 number, but just give me a call and I'll call you right back if it's a long distance call.
Yeah, nowadays, in a lot of cases at least, and not all seniors have it, but so many people with cell phones and things like that, they're not going to pay for those calls nowadays. So, yeah. So I know you just have this passion. I can tell from the first time we spoke that you love your work. Why do you love it so much?
Well, let me tell you a quick story about a lady that was in foreclosure. And truly, this lady was going to be living under the bridge. She was like 4 months behind on her payments, and the foreclosure was already in the works. I worked with her for 6 months, got them to hold it off. We finally, after 6 months, got it done. And to this day, this lady calls me crying, "You changed my life." This reverse mortgage allows people to do things they have never thought of they'd be able to do living on that fixed income. I had one lady cutting her medications in half. Because she couldn't afford to buy the medications. I had one that had the power turned off. We had to take the application by candlelight. It just changes the senior's life so dramatically. It is such a joy to see the new life in these people, and that's why I'm so passionate about it. I just love it.
That's great. So, just words of advice. Any words of advice you have? We have we still have a few minutes, but maybe to share with people who might be considering something like this. What input would you have for them?
I would say make sure you empower yourself with the knowledge of the options available to you. The ability to access that equity, make sure you're dealing with a reputable company, and check around because there are differences. It's all government. We have to follow the government guidelines, but different companies can do different things as far as their fees are concerned. So check around and get somebody that you think you can trust. I mean, that's really an important part is building that trust with your client, and that's why I like to meet face to face. But I look at myself as an educator. I want to make sure that people have the knowledge that they need to make an intelligent decision, not just jump into something. And that's how I see myself.
I have another question for you that I failed to ask, and I want to ask it, and that is, those of us that have been around and you see the real estate market go up, go down, go up, go down, and we saw a big hit, not that many years ago, but things are coming up again, but I hope I'm wrong, and I'm knocking on wood, but in all likelihood, based on history, at some point it's going to go down again, all right?
Right.
So someone that takes out a a reverse mortgage now, and it's based on, their equity and a formula and all that, and the market tanks again, what happens?
Nothing. Once your loan is locked in, like you do the loan today, your property's worth $625,500. You pull out everything that's available. Let's say it's $350,000, and next year, the market your home is worth $200,000. Well, you've used $350,000. Makes no difference. That home stands for the value. That's why there's that mortgage insurance premium. The home, if it's worth $50,000, stands for the debt. So you never have to worry about using more than the home is worth. When you pass it to your heirs, they don't have to worry that you've used $350,000 and the house is worth $50,000 because you've got that mortgage insurance premium. But once that loan is written, that's how it stays. That makes no difference what happens in the market.
Gotcha. So if the equity increases on the home, if things keep rising, can it be redone?
Oh, absolutely.
Oh, okay.
Absolutely,
right.
yeah. And that's your equity. If it rises, it's yours. If it goes down and you've used more than the home is worth, you have no worries about it because the mortgage insurance premium will take care of it.
Great. Well, Marilyn, thank you so much for joining us. Again, you could reach Marilyn directly at 408-722-0010. And again, your website again, Marilyn?
My website is MarilynBrownRoss.openmortgage, all spelled out, OpenMortgage.com.
Great. Thank you again for joining us on the Aging Boomers. I really appreciate it. Well, hopefully we'll have you back in the future. I'm sure things will change and want to update people. So, and thank you all for joining us. Thanks for all your support. Again, tell friends and family. You could download the app, Aging Boomers, on your iPhone or on your Android phone. You could go to iTunes. You could go to iHeartRadio. You could also go to agingboomers.com to listen to our shows. So be safe out there, and we'll talk to you all soon.
Thank you, Frank, for having me.
Thank you.